Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a very niche project just recently issued by the FASB addressing the insurance industry. So if you have clients in the insurance industry or you yourself are an entity that's in the insurance industry, this will be of great interest to you. However, as I said, very, very niche. So this proposed ASU is due to COVID-19 and it is related to the effective date of a recently issued standard as well as early application. So this proposal was issued in July and it is related to ASU 2018-12. This was part of an update that was done to our insurance contracts, and in this scenario it is what we call long duration contracts. Very common one would be life insurance, right? So those are typically pretty hopefully long duration contracts, and it provides updated guidance on a lot of disclosures and things of that nature. So this standard was issued, as you can see here, in 2018. In 2019, it was part of the group of standards, in addition to CECL and hedging and leases, that received a 1-year delay. So that was done in ASU 2019-09. It was done as a standalone standard. It was not included with the other ones, but as part of that overall delay in standard. So in November of 2019, it received a 1-year delay. However, the problem here is that COVID-19 is really eating into that additional year. So what people have provided feedback is that similar to the leases standard, that they're not really getting the opportunity to work on this due to other issues, due to the operational impacts of COVID-19. And so that global pandemic really impacting these entities. And so they have requested some additional time to implement. And so as a result, they are going to provide in another additional year of delays for all entities. So that does include public business entities. However, to help people early adopt and relieve some of the transition issues that we see, they are giving also some early application transition adjustments. So typically, if you're going to adopt the standard, you would do it to the earliest period presented. And so for some SEC companies, for example, that might be 3 years. So what this is now going to indicate is that if you early adopt, you would adopt at the beginning of the prior year presented. So if you are showing 3 years of financials, you would only have to adopt it for 2 years. If you're not early adopting, you would still follow the general rule, which is the earliest period presented. And this is really aligning with some of the SEC guidance out there. So this was thought of in particular for these SEC entities in terms of this transition relief. So this interests you or impacts you, and you want to let FASB know whether you think this is going to help insurance companies as part of the COVID-19 pandemic response. Comments are due August 24th of 2020. I'm sure the FASB would love to hear from you. All right, it was short and sweet, but it wasn't a very long standard. And so just wanted to make sure that you guys knew what was out there in terms of proposals. And I hope that for those of you who are impacted, it is helpful to know that there may be some additional relief coming. So that's a wrap for today's blog. I hope to see you on a future blog. Have a great day, guys. Bye-bye.